G. Chokkalingam, Executive Director and Chief Investment Officer at Centrum Wealth Management, joins in on the show. Chokkalingam, hi, afternoon. Firstly, let's start off with what you're expecting from Tata Motors, because the stock has gone weak into its earnings after having a good start. It seems like there is going to be some disappointment yet again on the global sales front.
There could be disappointment because we have seen a lot of volatility in the quarterly sales coming from global sales. Even the margin can slip down because the management has been attempting to move towards a low-end segment of cars, which fetch them lower margin. But however, the stock is very attractively priced, and in terms of 1 year forward earning, you are getting the stock at around 5 to 6 PE. But of course, tactically one can wait for the results, because last time we have seen when there was a little margin erosion, the stock has been beaten down all the way from 250 to 216 level. So therefore, I would suggest wait for the results, and if there is any significant correction post results, that can be used as an opportunity to accumulate the stock, because we continue to remain very positive on the whole global business of Tata Motor. And also on domestic front, the interest rate cycle, the reversal may be delayed, but definitely it will reverse within the next 6 months to 8 months. And then the domestic business also would start looking up. So therefore, one can buy post results if there is some correction.
Chokkalingam, what about Bharti Airtel? Would you advise investors with a medium and a long-term view to actually look at buying the stock? Because at the end of the day, if any operator will survive the policy uncertainty, it's probably going to be Bharti Airtel.
We have been continuously negative on the entire telecom space, including Bharti. I don't see any great prospects for the long term for Bharti Airtel. For the reason that the government is under stress and the fiscal conditions are under a difficult situation. So there will be more and more attempt to squeeze the money from the entire telecom space. And second, the competition has increased in every circle. And third, particularly specific to Bharti, they have gone for $12 billion of leveraging, and when the domestic business is tapering off in terms of growth. So therefore, considering all these facts, I would believe that there will be more and more pressure on the margin. And the growth is not likely to further go up significantly. Rather, it can fall, the growth rate in the top line. And so I won't suggest for long term, but tactically from a trading perspective, because the stock has been beaten down a lot. So maybe for short term, one can think of purely from a trading perspective. But for long term perspective, one can stay away from the stock.
Chokkalingam, what about the GDP downgrades which have been trickling in? We've had Moody's, Citi as well as CLSA. Do you think that is something that the market had already priced in?
Definitely, the market has been pricing in because we have been getting IIP core sector growth numbers. We also know that monsoon is a failure this year. But in stock market, it doesn't worry me the development of yesterday or today. So one has to look at the possibility of this GDP growth turning around. So if you ask me, I firmly believe that the GDP growth would turn around. We have seen in the last 50 years, India never had subdued growth for more than 1 or 2 years in a row. Very rare event. And second, we have seen even post-Lehman, our growth again coming back to more than 8%. So I remain confident that the growth would improve. The moment there is some clarity on the interest rate cycle, which, as I said, which may be delayed because of the failure of monsoon, but it is certain to happen. So the moment the interest rate cycle reverses, you will see a significant reversal of manufacturing sector. So therefore, from next year onwards, I am expecting the GDP growth to come back to at least 7% level.
So Chokkalingam, what would you advise investors to buy at these levels? What are your top 3 stock ideas?
Definitely one, I think, the risk for every asset class on the earth has increased, including the equity asset class. So we continuously keep advising people not to put 30 to 40% of the wealth, more than that in equity. So restrict to only 30 to 40% of the wealth. And second, go for good value stocks. So we continue to advise bet on pharma, private banks, and mid-cap IT stocks, and then deep value stocks in the mid-cap space. My top 3 ideas would be, I would start with Axis Bank. I firmly believe that the kind of growth it is posting, the difference in the valuation of Axis vis-a-vis other banks like HDFC and the Yes Bank should narrow down. Second idea would be on Infosys. Again, purely for short term, because the giant has been beaten down a lot and 12.5 PE is not, is too low for Infosys. So I would definitely buy Infosys at this level to get at least around 15% return in the short term. And third idea would be BHEL. I do not believe that BHEL would start degrowing from the next financial year. As I said, once the interest rate cycle reverses, the capital goods sector would start looking up, and that would be my, BHEL, which is beaten down by more than 45% in the last 1 year, would be my top pick.
Chokkalingam, many thanks for taking time out and joining us on the show. Let's also bring up Venky's India in front of you. The volumes, of course, have been the highest since October 18, 2011. The quarterly numbers have been extremely robust. The PAT has come in a good 100% higher this time, and the sales as well have come in higher by about 40%. The stock, of course, on a tear right now. It's a good 15% bump up that you're seeing on Venky's. Quick break on that note. When we come back, get your global market perspective with Philip Kisels of BNP Paribas Fortis Markets.